Hey everybody, we are live now. Welcome to the morning show here on Stock Market TV. I'm Spencer, that's JC. We've got Steve here. I ran the intro, but didn't hit the go live button. But we are live now.
Spencer leaves for he leaves for a few days. He forgets everything. I see how it is.
Oh, man. Oh, my goodness. All right, we do have Steve here as well. He's restarting. He'll be back in a second. The reason I was so distracted and forgot to go live is because I was buying Bitcoin with all of my money, JC.
I doubt you were doing that.
No, I was not doing that.
But I gotta say, that was a serious move that we just got in Bitcoin. We are above 31,000 on the BTC. Let's actually throw it up. Here, let me just drop it in. That was a big move in Bitcoin. And another thing that stood out that was different this time is that now you're getting the mining companies really making a move as well. And that is definitely something new. Can you, Spencer, throw up slide 2 there?
Yes, I can.
And I think this really tells the story here on what we're seeing in Bitcoin. We ran up to these levels back in the spring and failed. Once again in the summer, I remember it well. I was down in lovely Avalon, New Jersey, as you recall. And the fellows were out in Asia at the time, and I remember telling them, I'm like, I'm out of everything. I really got spooked when Bitcoin failed to break above 31,000 for 4 consecutive weeks. We had that one more dip, and now here we are off to the races. I got to tell you, if we're above 31,000 in Bitcoin, the risk is not being long enough, Mr. Spencer Israel. How do you feel about that?
Well, I guess my question, we've been talking about waiting for this breakout now for a while, and I guess my own is like, how do I phrase this? Like, it's great to see it break out, but it's better to see it hold. You know what I mean? So
Totally.
Like, do you wait? Like, I don't know. Do you wait for the retest of the 31, or do you?
Well, if you do that, so that's a great question, because I get asked that question a lot. And if you're always waiting for a retest of breakouts, you're by definition going to miss the greatest breakouts ever, because the best breakouts don't retest. Right? Strazza, how are we looking? Are we good?
Wind out.
We'll know. All right, rock and roll. So Strazza, this is a good question for you. What do you consider a confirmed breakout in Bitcoin?
Yes.
To me, it's already confirmed. So if it fails from here, then it fails from here. And if it's below 31, then all bets are off. But as far as I'm concerned, the trade is on. This is it. We want to be long. I am long. This is it. How do you feel about that?
What more confirmation do you need? I think we laid out the play pretty clearly all year. 25 was big, right? Big level.
It really was.
And I would think above 25, the reversal was in. But this is confirmation of the breakout. I think it's nice that we had key polarity zone 30, 25 above there. Trend is higher. 30 confirmation of that. Yeah, if you're still waiting for more confirmation on this trade.
Yeah. Strazza, this historically is the best time of the year to be buying stocks, right? That dip in October. We know that. So my question is the new 52-week high in Bitcoin evidence of risk appetite now coming back into the market after a 3-month correction?
Maybe.
You don't consider this as part of that risk appetite for equities? This doesn't matter. 600.
It's not risk off for sure, right? But I would look at other speculative stuff. Use ARK as a great answer for that. Off the floor, right? Microcaps.
Do these ARK stocks need to get up off the floor? You think that's right?
Yeah.
Yeah? I don't know.
Yeah.
I mean, I think they eventually get going if this is, in fact, the beginning of a monster run to new all-time highs in the indexes. I think that they'll just catch a bid mathematically. I think, when people are seeing new all-time highs in the indexes, they're going to reach down to the biggest pieces of hot garbage they can find, and those ARK stocks are that, right?
All right, Steve is being laggy again. Steve, you're being laggy. I'm moving you backstage. Not quite sure how to fix the internet problem here this morning because Steve's not the only person having problems here with the internet. We're
We're,
having,
oh yeah,
we're
we're
having,
back.
yeah, no, you're fine and I'm fine. Steve is having issues. So, again, not quite sure what's going on there this morning.
What's
But
going on
anyway,
with this country? Sean was having issues the other day. Alfonso's having
yeah,
issues, and I guess Alfonso's having issues in Venezuela.
I know. Wait. I want to address this question from the chat
Sure.
because I don't know this. So Curtis brings up an interesting point. Remember that BlackRock is stacking Bitcoin as they prepare for an ETF. Are they though? Like, do they don't need to own Bitcoin? They can just go into the open market and buy Bitcoin whenever they want. They don't need to stack Bitcoin behind the scenes because it freely trades and it's liquid as hell. So why would they need to buy it? Why can't
Let them
if
buy
they
it.
have
What's wrong with
to?
that? What's wrong with additional buy? Let's say that's true. Let's
No,
say there's a
That's not. Well, no, but that's not what Curtis is saying. Is implying, I think, that maybe one of the reasons for this move is that BlackRock is the biggest, the whale of whales, right? BlackRock, the largest asset manager in the world, is buying Bitcoin
and what's
to
wrong with that?
prepare because they don't need to do that. Because if
Okay, but
they
fine,
if
they don't need to do that. But what if they are? Why is that a bad thing? It's not.
or it's not a bad thing. I'm just saying I don't know if like to imply that that's the reason for this move. I think is
I
not.
know, I understand that, and I agree. That's
Yeah,
probably not
yeah,
true. But let's just say it was. That would that's
yeah.
who cares, right?
Okay.
Right? You see what I'm saying? Like I agree.
Yeah. You're right. Okay, you're right. I guess it doesn't really. I
Yeah.
guess it doesn't
Let's say
really.
these institutions are front running, the launch of an ETF. They probably are. So what? What's wrong with that?
No, okay. Seeding the ETF is one thing, but like they don't need to continue. It's not like BlackRock needs to continuously own like a giant stash of Bitcoin, right? To keep the ETF in line with to keep the NAV low. They can always go and buy more Bitcoin whenever they want to, right? It freely trades, so it's not
All
like
right.
I
So
don't know.
just an
Um,
update. I mean, I don't
okay,
know for sure. Hold on.
maybe they're doing fine,
I
whatever.
don't know
Okay,
for sure, but I am pretty confident that there are institutions out there that are front running an ETF launch, and there's nothing wrong with that. Good for them. Maybe it's BlackRock. It's probably BlackRock and others. So what? Let's just go over what actually matters.
all
Right
right,
now, Bitcoin is
fine.
sitting just under $700 billion as it makes new 52-week highs. At $700 billion. Right now, the total crypto market cap is $1.25 trillion, right? That would put, check my math, guys. That would put Bitcoin, if Bitcoin was a company, it would be the what, sixth or seventh largest company?
Sure.
I mean,
Yeah.
sure. Is that what the number is? What did I say? 700 bit what did
Yeah.
I say?
What it'll be in the top 10. Put it that way. I don't
Crypto,
know the exact.
Bitcoin 680.
Okay.
And if you look at total market cap, Google is one company, not two. It would put it just under Facebook. So just ahead of Berkshire Hathaway. It would be the seventh largest company,
Yeah.
Bitcoin, if it was a
All right.
company. So
Fine.
that just to put things in perspective.
Fine.
Go to slide one. So go to slide one here. So
Is this a new slide one or an old slide one?
it's
We're
been
about to
there.
find out.
It's been
Okay.
there. Yeah, there it
There we
is.
go.
So I want to talk about this for a second because let's quickly run down the futures. Dow futures up 160 points following through from yesterday's bullish action. S&P futures up 25 handles, about 60 basis points. Same thing with the NASDAQ, 60 basis points. Bonds are flat. Gold down a little bit. Silver down a little bit. Copper up a little bit. Oil up a little bit. So that's pretty much a wash there in the in the commodities. Dollar up slightly, rates inching higher a little bit, and volatility index is definitely down. Let's see if Strazza is available because I do want him to see this slide. This is a great one. This one shot out to the homie Jeff Hirsch, and this was the almanac. This is this year's, technically it's next year's Stock Traders Almanac. This is the 24 Almanac. And what did Mr. Hirsch write there on October the 12th of 2023? So this is 2 weeks ago. he wrote this. He says, buy in October and get your portfolio sober. Jeff Hirsch. And then they're over on page, what is that, page 46 of the Almanac. We're looking at the NASDAQ, the Russell 1000, and the Russell 2000 on a one-year seasonal pattern. This goes back to 1971. And you'll notice something interesting there in October, Spencer. What do you notice that happens at the end of October?
Well, I can't see which of those lines is the bottom. I guess it doesn't matter. Is that they both tend to bottom, right? That's what I see. I can't tell which is which, but yeah.
You are, but there are three charts here on this.
No. Which line is which?
Yes, fair. The you'll notice here that the strength comes in towards the end of October. And what do you know, Spencer? Here we are towards the end of October. And they tell me, oh, JC, you know, the seasonality is already priced in. Everybody knows that this is the best time. Everybody. Well, they said the same thing last year. And not only last October did they not buy stocks, they were shorting more. So no, seasonality is not priced in. This is just the way markets behave. Seasonality is just a visual representation of those behaviors. And if you think that it's common knowledge and everybody already knows and is already priced in, maybe you should go back and check the math, because clearly that's not the case, right? So I find it really, really interesting. I wanted to give a shout out to Jeff Hirsch. If you don't get the Stock Traders Almanac every year, I don't know what you're thinking. It's a great book. Right?
Yeah.
You know,
how'd I do, Strazza? Is that good?
Yeah, I like it. Let's wait. The way we closed yesterday was really dumpy.
Closing what?
Stocks.
Like what? The S&P 500?
Yeah, big sell into the close yesterday. The most bullish action yesterday was from the market perspective, because you had the dollar off a lot and rates come off a lot. Getting a follow through on either of those one-day moves from yesterday. Today, stocks, the price action from yesterday.
Yeah,
Bitcoin stocks.
I'm buying.
Huh?
I'm buying.
Yeah, I mean, but that's just irresponsible, and I think you're just trying to get other people.
You think it's irresponsible to be buying the stocks that I made a list of stocks I wanted to buy last week? It's irresponsible to start putting money to work where there's relative strength.
We talked about this on the phone yesterday.
Yeah.
I told you how I feel. Yeah.
Listen, before we bring in Brett, why don't you throw up slide 3 so I can show Strazza, how irresponsible I'm being.
You're just ignoring price, I guess. So
I'm not ignoring price. I'm buying because of the price action. I don't buy the S&P 500. Like, you don't like the way the S&P closed. Okay, great.
I don't like
to buy the S&P 500. So you think the healthcare is going to be like this then? Is that what you think?
I mean, stocks don't excite me. Go for it. Have at it.
You think it's like this? I think it's like this. Go, turn it around. Next chart, Spencer.
Wait. Oh, next chart. Sorry.
Tell micro caps. Small caps.
I'm not buying micro caps. I'm buying mega cap healthcare. What does that have to do with micro? You know how much weighting? Tell me how much weighting micro caps have in this index.
Don't you like to stack?
Is it more than 0 or is it 0?
I mean, we use the top here. It's easy to make money on the long side when the broader market is supportive, right?
Yeah.
You're fighting a trend right now.
Am I?
That's what you would say. Yeah.
I'm fighting a trend because you don't like the way micro caps are closed, so I shouldn't buy large cap healthcare.
I gave you a list.
What does that make? That doesn't make any sense at all.
I didn't like the multi-month highs and credit spreads either. You like buying stocks in an environment where credit spreads are making new highs?
I am not buying the S&P 500, Strazza. I'm buying relative strength in healthcare.
Again, is it
Go to United Health. Go to United Health, UNH.
I'm right.
What do you think? You think this is a bearish pattern? This is one of the strongest trends. This is one of the strongest trends in the history of the stock market. It's been consolidating for 2 years, pushing up against new all-time highs, but I shouldn't buy it because you don't like how microcaps closed yesterday?
Yeah, right. An environment where small caps are breaking their prior cycle highs, which is the level we've been talking about 2 years, how important it is to the broader market. So the odds are stacked against you based on the weight of the evidence right now and the price action.
Well, I don't know if you've seen some of the sentiment, but almost everybody agrees with you that buying stocks is a bad idea.
Right. Let the market find its footing. Right. Let's have stocks stop.
You can let the market find its footing. I am buying healthcare stocks. Why don't you look at the next one? Look at Merck. Strazza thinks that I shouldn't be buying Merck because he doesn't like how microcaps closed yesterday.
I like this one, and I like Boston Scientific. If these little tops are failing here, I think they're great entries. Again, harder.
It doesn't seem to me. Merck looks better than Boston Scientific, but yes, I get your point. So you're being a little bit more patient, and I am being less patient, arguably right on time. I guess we'll see. Right?
I've put on a couple trades. Don's put on a couple trades since last week. All of them. That's just information, and we're listening to what the market is telling.
Okay, I didn't buy anything last week.
You are ignoring the message of the market.
I am not ignoring the message of the market. I can't help but pay attention to what the market is suggesting all day, every day of my life, weekends too.
Here's the
I'm
problem.
not ignoring anything. I try to ignore it sometimes, and I can't help myself. So.
The problem with everybody who's going to rush into these Bitcoin miners derivative plays via the equity market today. Bitcoin's trading at its first time weekly momentum's been overbought first quarter of 2021. Daily momentum is at such an extreme now, we're somewhere almost 90s, I think. This trend is going to have to cool off for Bitcoin. Right? Jumping into Coin or Riot or Mara here, and Bitcoin's recent run just kind of fizzles and I think those are going to give back a ton when Bitcoin digests its gains over the last 2 weeks. So
Strazza, should we sell all our uranium stocks that are pushing up against new highs because you don't like how microcaps closed, or is that an exception?
Bitcoin stocks right here today, right? Because
I know, but getting back to the earlier point of ignoring the message of the market.
You are ignoring the message of the market.
So we should sell all the coal and uranium stocks, is what you're saying, because you don't like how microcaps closed.
I don't think you own any coal or uranium stocks. So
I own a uranium stock. I don't have any coal.
Hey, I'm going to bring on Brett here. And while I do that, Steve, why don't you try using your phone as like a mobile hotspot or something? Because your internet is, for whatever reason, internet in Key West today is not great. Such is life when you live in freaking Key West sometimes, I guess. But let's bring on today's guest. And we can move on. He brought some charts with us, so let's go.
Nice. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Brett, what's up, my man?
Hey, JC. Good to see you.
Good to see you as well. Hold on, I like that picture behind you. Is that like a bird's eye view of New York City?
No, it's a bird's eye view of Dogpatch in San Francisco, which is south of Mission Bay. Nice. And it's sort of our wallpaper in our meeting room.
It is pretty cool. I like that.
Yeah. It's a 8 foot by 4 foot aerial photograph that we had blown up, and it sort of shows this way is north, and this is the bay down here. So it's just sort of representative of our neighborhood here that we're proud of and named our firm after.
Are you you ever head up to Sonoma and Napa?
Oh yeah, absolutely, man. I mean, living in the Bay Area, that's a big perk, is you can just get up there anytime you want, you know.
Let me
know I know you're a big
fan,
JC.
Up. I got you. I was just on the phone with my boy Chris yesterday, Chris Venn over at Ridholtz Wealth Management, and he's going out with his wife, and I just laid out the itinerary, where to get the tacos, where to get some good juice, dinner.
You got to do that, man. You got to talk to your friends and people who've been up there and and share where to go, because there's literally like dozens and dozens of great wineries, and you got to find out. Like next time I go, I'm going to call you. I think you've got some undiscovered gems that I don't know about yet.
And I'll tell you where to get the tacos, because the tacos on the East Coast, Brett, are unedible out here. It's worse than the pizza is over there. I'd rather be eating pizza in California than tacos on the East Coast any day. That's how bad the tacos are out here.
We don't have good pizza. That's our problem.
Oh, I know. But the tacos here are worse than the pizza is there.
Yeah.
Yeah, 100%.
More
I'll die on that hill.
All right, Brett, what is your take on the conversation that we're just having here on buying stocks now
Okay,
versus
yeah, I'm glad you
waiting?
asked me.
Yeah.
So I wanted to back up JC. So yeah, I think that the S&P futures up today. I know we have Microsoft and Google earnings today, and that's going to be important for the short-term direction, right? But sediment breadth got washed out in early October, and it was another one of
You
those
think you
conditions
would
like
call that washed out?
enough, yeah. Like the
Well,
percent of stocks in the S&P that were under their 50-day moving averages was enough for me.
yep.
And you look back, and it worked really well in 2022. So we got there. The RSP versus the S&P 500. RSP looks way more bearish. It broke down from its uptrend, and I think you had enough of a short-term sell-off since July 27th when we had that outside day bar on the S&P, which was a great sell signal, to go ahead and expect that you can buy stocks. And JC, I want to say, you gotta keep that mindset of buy low, sell high. And I know that you just showed a couple of breakout looking charts like healthcare, and I
They
do
haven't even
subscribe.
They haven't even broken out yet, for the record.
Oh, well, Merck did, but
Yes.
I am a fan of relative strength, and we are here at Dogpatch Capital, so we respect breakouts to new all-time highs for sure. But when you like a sector or fundamental reason for buying a stock, you want to look for opportunities to buy that on a pullback, right? And if the S&P is in a position to start to rally once rates start getting cut, then you want to buy on dips, right? And that's what we're experiencing right now. So, you got to expand your time horizon a little bit. I know maybe a lot of people watching the show are looking for a 2-week trade, but here we manage, retirement funds for individuals a lot. We have a much longer term time horizon. And I kind of want to talk about a little bit of what's going on with that with you today too.
Please.
But that's sort of my perspective on what you just said. I don't have any kind of perspective on Bitcoin.
So Strazza thinks it's irresponsible of me to be buying healthcare stocks because he doesn't like how microcaps closed yesterday. Would you?
Yeah,
I'm buying
uncorrelated.
microcaps.
Uncorrelated, I
I'm
think.
not buying microcaps. These are
I
literally
get
the
that
worst.
microcaps, one would expect to see the Russell and even microcaps really show some strength. And not everyone, but maybe not even the indices, but within the group. And I know you've written about that before, JC, where you're like, look, there's underlying positive charts in these groups, right? And you call them out, but you aren't seeing enough of them right now to get bullish on just that. That doesn't mean that there aren't industry leaders in other sectors, right? Especially large caps. So yeah, I think they're just uncorrelated right now. I don't. Sorry, Steve.
Yeah, I mean, listen, I think that if the S&P is making new all-time highs, and I think that if the Dow's making new all-time highs, which they're not too far away from,
Right.
you're not going to see microcaps making new multi-year lows. Like, they might be underperforming, they might be in their sideways range. I don't necessarily think they're going to be collapsing. I just think that they're going to have a hard time keeping up with the mega caps, as they have for a long time now.
Yeah.
So
The only thing that keeps me up at night, JC, is that the negative breadth that I know my guy John Colovos talks about, and he's dead right. I started out in the business in '99, and I remember learning from the technicians at my firm in Atlanta right away what breadth was, because everybody was talking about how it was just streaking south for the longest time. And it was all during that huge NASDAQ run up. And the old guys in the CMT Association were ringing the bell saying, you guys better watch out. This is not healthy. And it turned out to be right. Now, I hate it when people use one-time analogs. They go, well, if you look back at 2014, we had the same situation, so therefore it's going to happen the same way. Like seasonality, like you were just talking about seasonality. I mean, remember 2018? We got clobbered in December. And it was ugly, right? And so
I was selling my treasury bonds on Christmas Eve, and I know that because I was roasting a pig and selling my bonds at the same time. And I remember like chuckling to myself, like, "Oh, this is funny,"
That's
you
awesome.
remember where you were, right? Because we were super bearish. In fact, we were shorting the Russell 2000 here in early October of 2018 at these prices. So that former resistance, if you will, hasn't turned into support yet. I mean, it did last summer, I suppose, but it hasn't turned into support yet this time around. That's what I'm watching. We were here. We were shorting it right here.
Yeah. Yeah. So, you know, the backdrop, I think, is important for whether or not the seasonality works out this year or where we head in 2024. And what we're finding the hardest time explaining to people is actually, if you could pull up the next chart, the second one that I said, that's the S&P 500, which, you know, we could talk about all. You guys talk about all day. Here it is. So this is a chart of the S&P 500 in orange, and then the blue line is the TLT, the 20-year Treasury ETF. And this goes back to what, the early 2000s. I think it goes back 20 years. And this is what's so remarkable that we're talking about with clients, and is what's going on in the bond market now. As a little context of how I look at bonds is, I was at the CMT annual conference 2 years ago, and Jim Bianco got on stage, and it was right after bonds started behaving really badly, and everyone's antenna went up, and they're like, something is wrong. And he very wisely said that this market is going to be in a difficult situation regarding bonds. In other words, it's going to affect everything until something breaks. Okay. And I think he was the first person I heard say that. It's become kind of like common saying now over the last year and a half. And we still haven't seen it, right? We all thought it was Silicon Valley, and it turned out that that wasn't it. So we're still seeing this massive sell-off in bonds. And sure, we had a little blip up yesterday because the comments that Bill Gross made or something. I don't know. But
well, when you say nothing is broken, what are you referring? I would argue the housing market's pretty broken right now. So
the what housing market is broken?
Yeah, I mean, it's
Broken.
frozen.
That's a good point. I
What's
think
broken
maybe,
about it? There's too many realtors.
Yeah, I was going to say
realtors,
what yet is broken about it. It's not yet.
Well, it's
too many
frozen.
realtors. They need to go
frozen.
away. When they go away.
I don't think too many realtors. All right.
No, there's more realtors relative to the amount of houses per sale ever.
Yeah. I mean,
yes,
there's a lot of them.
No, that's a good point about psychology, though.
Yes.
You know, a lot of people, a lot of Americans can't afford to buy the average house right now. It's like the median income is like 60% of the amount of money you need to finance
well, let's
a
remember
30-year
that
mortgage.
These Americans can't afford to buy a house where they prefer to live, which is it's a huge country.
There's
plenty of places that people can afford to live. They might not want to live there.
Yep.
But they have those options.
So there's that component. Yeah. Then there's the component if you go to the grocery store, which I don't know about you guys, but you know, usually I'll go in because I have some idea of something I want to cook. Like, oh, I want to cook a steak tonight, so I'm going to go to the grocery store. I'm going to get the stuff for that. And I walk out and I'm $120 poorer, even though like my steak was like $30. It's because I buy some other stuff and it's just like crazy every time. Boom. And that's weighing on people. And now you look at this chart and you're like, okay, if I had a 60-40 portfolio because I'm 55 years old, I'm down 20% over the last 2 years. Okay, still. And that's if you've invested in TLT and the S&P 500. And you know, millions of people have this investment portfolio around the United States.
Yeah, but it was dumb. It was dumb then, and it's dumb now.
It was okay after a year. People can live through that, and they can listen to their
60-40 portfolio is a horrible idea. It completely eliminates the third asset class of commodities. Where's that in the portfolio?
Yeah, surprisingly. So we are fans
it's 60-40-0.
We're fans of diversifying with commodities, absolutely. And I wanted to ask you, if I get to ask one question of JC, my friend, to how I respect your understanding, market knowledge, whether or not this idea of a new super cycle in commodities is true, and then wealth advisors like me should be looking to sort of replace bonds as the diversifying asset class with commodities, or at least tweak it so that it's less reliant on bonds. Because
it's two things. And I am in the camp that we're in year 4 of a commodity super cycle already. Yes, there's an overwhelming amount of evidence that suggests that. But before we get there, I think it's important to remember that the 60-40 portfolio, this was an idea that came after bonds and stocks had been so negatively correlated for so long.
Right.
But you mentioned Jim Bianco, and Bianco does great work on this. We should have Bianco on, by the way, Spencer. Get him on.
Yes, you should.
We should.
he does the work where you can see those correlations turning positive when inflation is the concern. In those inflationary periods, stocks and bond correlation turns positive. It's not the negative correlation that you normally see when deflation is the concern, which we have seen the majority of our careers, right? Or my life for that matter, right? You know what I'm saying? So it's just a different type of environment. So the 60-40 portfolio, as bad as an idea as that was before, it's even worse now somehow, right? And then especially if we are in a commodity super cycle. And Brett, I appreciate it. You're like, do you know? I don't know anything. I don't know what's going to happen next year or 10 years from now, or if this is a super cycle or a cyclical cycle. I don't know. You don't know. Warren Buffett doesn't know. Paul Tudor Jones doesn't know. Spencer certainly doesn't know, right? We don't know. But
I think you're catching strays. Mind my own business.
Yeah,
Well,
stray.
yeah, no.
Hold on. What do we know? What do we know, Brett? We know that historically, these bull markets in commodities, we know for a fact that they don't just last 2 or 3 years. They never have. So are you going to make them, not you specifically, but generally speaking, are you going to make the bet that this is the first commodities bull market that only lasts 3 years and the first one that doesn't last 10? I'm not making that bet. There's no evidence that suggests that we should be making the bet that it's over. Everything we're seeing is the exact opposite, is it not?
Yeah. So I'm in agreement, but I want to point out this bond trade potential. Okay. I think that all the signs are starting to point towards a 2024 rate cut by the Fed. And it's going to be, in my opinion, a very typical type of recession where we start to see unemployment move up. The Fed's going to respond more aggressively than they should because that's what they always do. So they'll cut rates and there will be a flight to quality. And right now, this is the lowest bond prices we've seen in 16 years. And so if that isn't a potential layup catalyst for a rally, I don't know what is. And so no one out there, even though we just said 60-40 is a horrible idea, that's our opinion. Very few firms, large money management firms, are abandoning bonds as a diversifying asset. They will continue to insist on having bonds in people's portfolios. And the fact that they're down right now is, I think, an aberration. It's predicated on this idea that the current situation in Congress isn't managing our debt level, and that there's fear that they're never going to be able to curtail spending. So there's going to be this oversupply of debt. I think that is a short-lived idea. So I'm kind of coming out with pretty bullish on bonds here, and I wanted to point that out on this show. And I've got another comment I want to talk about with regional banks, if you're into that.
How are you
I want to bring that up.
Trade? How are you expressing a long bond trade?
So
bonds are very broad. It's an asset,
right?
Full of all kinds of different bonds.
Yeah. I think corporate bonds are the best way to go, and longer duration.
Junky corporates? Junky?
10 to 20 years. No junk. AAA,
Come on, JC.
AA rated.
I'm asking.
Corporate bonds. Yeah, just buy a basket bonds. It's a little harder to do. It takes a little more time out of your day to do it, but I think it's better than just taking on the TLT. I just use TLT on this chart as an example.
Are you buying individual bonds, or are you buying the LQD?
Both, actually. And it depends on the client and depends on what they have in their portfolio. But yes, both.
Man, what about that? Is that a double bottom on the LQD?
Maybe.
Wait,
I want to talk about regional banks real quick.
Yeah, I do want to get your thoughts on the KBW, right? You brought that along.
Yeah, the KRE.
Slide 21, quick, before the banks. Look at slide 21.
Okay.
Real quick. Sorry, Brett. I'm sorry, Brett.
Go for it.
Okay.
Good chart, and you brought it up.
No, that's not it.
No, it's a new 21.
Yeah, I got you.
All right, watch this. This is what Brett is buying, and I have a hard time disagreeing, buddy. As much fun as it is to disagree.
I love the divergence.
What's there not to like? I mean, if LQD, I mean, you want to be safe, call it 100, let it really get going. You want to buy it here against 99, that works too. The trade is very simple. If you want to be long bonds, you want to be long against the lows And you know when the lows were, by the way, Brett, it was exactly 1 year ago. So if we're above those lows, and you want to talk about relative strength in the bond market.
That's
How
a
many
great chart.
bond ETFs are above the lows from a year ago?
Yeah, I'm liking it. And again, maybe this isn't the exact low, but bonds are so cheap relative to where they have been historically, and where I think that they're going to get to once we go into a recession mode and the Fed starts cutting rates, that this is sort of a layup for maybe anywhere between a 10 to 20% price return, let alone the coupon you're getting,
Yeah, what are you getting here on the LQD?
It should be around 5-6%.
I mean, it doesn't sound like that's the reason you're in it.
No,
but
it isn't.
4%, 4.1%. It's not terrible.
No. So,
all right, regional banks here.
Sorry.
Yeah, and I guess that regional banks are sort of correlated to this discussion, right? Because they've just been clobbered, and it's been like wave after wave of negative news on the regional banks and banking in general. I heard the other day that a quote on Bloomberg Surveillance, somebody said, well, banks just are a horrible sector to be in, except JP Morgan. Everybody owns JP Morgan. And I thought that was kind of funny. The regional banks this chart is a collection of 140 equally weighted regional or stocks that are regional banks. And by regional, they also include a lot of community banks, which means that they're, not even in a region. They're just like covered over like Southern California or something. And of these stocks, the median price to tangible book is 116%. Okay. And there's 30% of those stocks are trading below their tangible book value right now. And now that got way lower earlier this year when we had the big sell-off. And so, it isn't the low. But the last time you saw a situation where the regional banks were so washed out was in 2008. And that's when you got like more than half of the KRE members were trading below book. Now, so that means valuation is ripe for the picking, but this thing's still in a pretty strong downtrend. And obviously we don't buy stocks in downtrends, right? I mean, the 50 days below the 200-day, 50 days heading lower.
What about bonds and bonds? What about bonds and downtrends? Do we buy bonds and downtrends, Brett?
But we buy cheap and we sell expensive, right? And so this is in the cheap range. So the reason I'm pointing it out is because there's been a lot of negative news about banks lately. And it begs the question, what more is going to be said about the environment for banking? Margin is going to get worse? You're telling me the yield curve is going to get worse from here? I can see it maybe lasting a little bit longer, but are credit conditions going to get tighter? How? They're already insanely tight. No banks are lending. So I think that all the negative news is pretty much baked in. Maybe you get a retest of these lows, but I think that's it for regional banks. So you want to be doing the basket idea, I think, here.
Well, we haven't seen any failures in a while, right?
No, we haven't seen failures. I don't know if we're going to. It's very important to point out this is a really different market environment than 2008. 2008, the reason we saw the bank failures is because everybody was over-levered, and that was on the big bank side. And on the small bank side, it was making a lot of really bad commercial real estate loans, and that soured, right? And also there was some bad securities banks had on their balance sheets. That doesn't exist today at all. A lot of these community banks have been cleaned for years because of the great financial crisis. And now they're just suffering because of the yield curve. And it's happened before in my career where the yield curve inverts and banks suffer for a while, but then it's a great buying opportunity. So I think the yield curve it's all about interest rates right now. And that's why I want to talk about regional banks and just point out where they're at.
Wait, so just to clarify, because again, regional banks are in a downtrend. So what do you do here?
I think you wait and observe to see if you can break out from this downtrend I've drawn on. So a moving average breakout, downtrend breakout, a retest of the low is possible. That's the reason I showed it on the chart here. Now,
Okay.
The old lows from 2008 are below this. So if we don't hold, look out below. But, that's why we're technicians. We've got clear-cut stops. We've got risk management.
Sounds to me, Brett, you are in the camp that this seasonal strength that we tend to see into year-end is coming.
Yeah, and I hate to say that it's any more than that, though, JC, because I suspect that the S&P is not reflecting the recession that's coming yet. I think that this soft landing idea really infected people's brains, and they have yet to shake it off. It's not happening, the soft landing, and I'm not saying that Armageddon's coming, but
Who's landing? Who
I
is
mean,
it
if you
that's
pull up
landing?
that chart of the S&P 500 versus the TLT that we just looked at. You're telling me that after all that we've been through with interest rates way higher and the impact of inflation on everybody's savings, and that's it? We're down like 5% over the last 2 years. I don't think we've seen enough sell-off enough correction. Valuations are still too high on a lot of stocks in the
Then
S&P.
if valuations are too high, how come the cheapest stocks are the ones that correct the most during corrections?
Flight to quality. I mean, the reason that we all own Google and
It's not
Microsoft
flight, but
is
those
because of the fact that there's a lot of cash there.
The stocks with the
It's a-
highest valuations are the ones that correct the least. So how can valuation be a problem? The cheapest
well,
stocks are the ones
Let
correcting.
me crack
the most.
open my fundamental textbook. My grandma died.
I'm just saying. I mean, I
mean, it's a good argument, I suppose, but yeah, there is always going to be leadership in the laggards. I don't know. The S&P
Well,
versus
yes,
the RT,
someone
JC,
has to lead,
is
right?
obviously
Someone has to
different,
lead.
right? The S&P is held up by the mega cap tech, and when
what
I
about
say
industrials?
valuation,
What about the fact that industrials are the best performer? How many tech stocks are in the industrial sector?
that's true. Not very many.
What I'm
And
saying is
and so yes, that's true. And you got to go back to the business cycle sector rotation and the fact that I think industrials and healthcare should be rallying in the middle of what is the corrective phase, right, in the market, and then you start to see tech start to outperform during the
right, hold
burgeoning
on. I'm glad you
beginning.
brought up healthcare stocks because healthcare is the largest component of the Dow Jones Industrial Average. It's the second largest component of the S&P 500. I think it just gets forgotten about, especially after it's done nothing for 2 years. But when you zoom out, healthcare is in one of the strongest secular uptrends of any sector ever. And we've gone sideways for 2 years, and people have just like forgotten about it. Like, oh, they don't even know that healthcare is such an important component of these indexes. I think that there's a sentiment reset that we have seen in healthcare, especially because healthcare has so many different types. People are like, oh, biotech suck. Yeah, biotech suck. What does that have to do, with these weight loss drug manufacturers or whatever, or some of these healthcare providers that continue to crush it? I think there's a wide diversity in healthcare, and I think there's some spots there that continue to shine.
Do you think your United Healthcare is a little negatively correlated with like the more broad market indices?
No, it's super positive actually.
Okay.
Yeah.
I just asked because it was suffering while big cap tech was rallying.
It's almost one. That's how positive correlated.
Okay, well,
United Healthcare, it's kind of unfair because United Healthcare is literally the largest component of the Dow Jones Industrial Average. One stock represents 10% of the Dow.
Yeah.
Yeah. So it's actually very, very positively correlated. Look at the chart. Look at the chart.
Brett, before we let you go,
Sure.
I heard through the grapevine, a little birdie told me, is it true you're teaching a college level
thanks for bringing it up.
course? I didn't even know that colleges taught technical analysis. Maybe do they? I don't know.
Yeah, they do. There's
like
quite
20
a few,
of them,
actually.
Right, Brett? It's like 20
a
of
lot
them.
A lot of our friends have little teaching gigs as adjunct professors around the country.
Russo does.
And so Golden Gate University is here in San Francisco. And my mentor, dearly departed friend, Hank Pruden, was sort of the founder of that program at Golden Gate. And now there's a friendly professor we have who has initiated a Master's of Science degree in finance with a technical analysis concentration. So you get your master's degree in finance, you learn all the fundamentals and everything that goes along with that, like discounted cash flow analysis. But then you take technical analysis courses and the behavioral finance course as a sort of like the capstone to get you the job, right? So there's that old saying, the CFA gets you the job. This is like a combination of getting a CFA and a CMT, and then going to an employer and saying, I just graduated, but check this out. I think it's deadly if you're looking for a job. So if you're thinking about getting a master's degree in finance anyway, think about Golden Gate University, because you do it online, and the price is really reasonable, and you get your technical analysis education. Now, it isn't a replacement for the CMT. I didn't mean to say that, but if it is an introduction to tell an employer that you know what's going on with technical analysis in the markets, it's a layup, I think.
And it'll get you going, right? It'll get the momentum going of taking the exams and stuff like that. Yeah, for sure.
Yeah, our goal is to indoctrinate. My goal is to indoctrinate people into using technical analysis. That's the reason I'm teaching there, and I'm trying to help the program out. I think that this is a great way to do it on a professional level, right? Obviously, you could go and learn on your own someplace, but if you want to be an actual practicing technician and get respect, this is a great way to do it.
Brett, you've been a SoCal guy, you've been a NoCal guy, right?
Yeah.
What do you like better?
Well, you know what? I'm glad you asked, because I'm San Francisco all the way, and I'm Northern California. I'm happy walking around in 60 degrees with a t-shirt on. But when I lived down in SoCal, it was hilarious, JC. I felt like such a jerk complaining that I wasn't in San Francisco, because the people were nice. The weather is insane. I'd get out of my car and walk up to my door at my house in the evening, and a little hummingbird would come up to greet me, and then a butterfly would go by. I'm like, what is this, the Garden of Eden?
Yeah.
It's crazy. So
it's pretty awesome.
I was sad to leave, and I would happily live there again someday.
Dude, that SoFi Stadium is unbelievable. That place is sick.
Yeah, it's sweet.
Very impressive. Is that where you lived, in Englewood?
No, I lived down in Irvine.
Oh, I didn't realize you were that far south. Oh,
yeah.
It's even better than LA down there.
Yeah, it was nice.
Yeah.
But yeah, I'm
better
NorCal
tacos,
all the way now.
Better tacos, NoCal or SoCal. Who's got them?
Oh, better down south. Absolutely.
Really? Because it's closer to Mexico?
I don't know about that, but maybe.
Okay. All right, fair.
All right. Everyone follow Brett on Twitter. The link to do that is in the description.
Thanks.
Also check out Dogpatch.
Thank you, Brett. This was fun. Well. Let's do it again.
Thanks, guys. I very much appreciate it. Talk to you soon.
All right.
That's great.
All right. And for the record, it does appear that the software that we use for this show is having some issues this morning. It's not Steve's internet. That's the problem. It's the software that we use as it relates to Steve's internet this morning.
Yeah, the Fonz was having some issues too, huh?
Yeah, other people are, for whatever reason, you and I are okay. I'm not sure what's going on, but we're fine.
Oh,
Steve is here.
Looks like a switch to OBS is coming. I could smell it.
Well, OBS wouldn't necessarily solve this problem. So
I don't know.
Well, I'm telling you, it wouldn't necessarily solve this problem. But anyway, okay, what's the deal here? We talked about crypto. That's kind of the story of the day here. We did have like a shit ton of earnings. Not a ton. Okay. I should bring the calendar up on that. That probably makes sense. Not like a ton that like are super interesting, but a lot of big names this morning, right? So you got General Electric reporting, you got Coke, you got 3M, Spotify, RTX was a big one, actually. You can't see it there. It's in the bottom. My name's covering it. But RTX, they raised their guidance, and they did a doozy of a buyback. Haven't seen too many buyback headlines. Earnings season is very young. This season is very young. Haven't seen too many buybacks yet, but they announced a big one this morning. GM this morning, Verizon. So a lot of, stapley type stocks that are in huge downtrends, that aren't super interesting. Spotify is not in that group. Spotify is, that chart does not look like, the staples. But yeah, do any of these names interest you? Tonight is part one of like the big one, right? Tomorrow night's part two. Tonight we get Alphabet, we get Microsoft. TXN is a big one as well. They're a very big semiconductor. So, watching
3M, those. 3M stands out because this has been such a disaster. Up 5% this morning on the 3M. I think that this is a big one because if this is a secular bull market in equities and this is the pullback that you buy, then my suspicion is that 3M is not going to be crashing. and that this is where you buy 3M. So let me show you. These are the former resistance levels from last year, and I'm going to throw it up here on slide 2, Spencer. New slide 2.
Mm-hmm.
And then this is to me, got of that list, this is a monster. You know, this is a big one. You know, I consider this, you know, when we talk about bellwethers, you know, and you talk about industrials, what do you talk about? You talk about Caterpillar, you talk about Honeywell. 3M's got to be in that conversation, no? 3M is as one of the bellwethers of industrials. And this thing has come off from 250 to 100. And this thing's lost 60% of its value in a very short period of time. And notice how it's back to the highs from last decade, or from 2 decades ago, I should say. Up 5 points today, back up towards 90, right? Is that where we are right now? We are just under $90. I got to tell you, Spencer, that puts us back above those June 2004 highs. If you're looking for opportunities here in industrials, you're not looking to buy strength, but look to buy some weakness here. This one could be on the radar. I would say below 90, leave it alone. We got to get back above 90 and stick that landing. This is serious bottom fishing here. And bottom fishing, as they say, can be very hazardous to your wealth. But I would say that this one's got my attention, Spencer.
When was that all-time high? 2015? 16?
This was in 2018.
18? Okay. Because I was just curious when they announced that, when the lawsuit came out, you know, they were getting sued. Remember they were getting sued for the earplugs, and they settled for $6 billion over earplugs that they supplied to the military. They settled this year. But the lawsuit
supplied to the military. This is like a real lawsuit. This really happened.
Yeah, $6 billion worth of earplugs.
So, how bad were these earplugs? That
apparently they were really bad.
Jeez, $6 billion for bad earplugs. Like
breaking news: war is loud, right? And you need to protect your ears. So I guess these earplugs were defective. But I was just curious when they got sued, and they got sued in 2019. So, and the settlement was announced this year. So, not the all-time highs. I was just wondering how that relates to the lawsuit. But anyway,
for tomorrow you're interested in Google.
Oh, you're interested in Google. You're interested in Microsoft. Where's the calendar? Let's bring the calendar back up.
Yeah, those are big.
Yeah, those are the big two, and then obviously the next day you have Apple, you have Meta. But yeah, tomorrow Alphabet and Microsoft. I'm sorry, tonight Alphabet and Microsoft are the big ones. TXN and then Visa as well. Although didn't MasterCard already? No, they're on Thursday. Never mind. So okay, yeah.
I don't really care about Visa and MasterCard all that much here as far as their earnings are concerned. I'm not really concerned about the earnings for any of these companies. I'm more interested in the market's reaction of those.
Yeah. No, me too. I mean, I know that's not true. I am interested in the numbers, but
don't front.
But I am equally interested in the reaction to those numbers. So that's the stage for this week. Okay, real fast, and we're getting some questions in the chat. Kimmy is not joining the show. Day Trader Pro, her room going in a different direction. Totally okay. We can definitely get her back on this show at some point, but for the time being, we're going to be relaunching that service very imminently, I should say. Right. So stay tuned for that.
And I have inside information, so I know what's
more.
Coming.
I think you all are going to be very pleased with the relaunch of that service and who that trader is. I don't want to give too much away. I guess I'll just say should I say I forget it. I'm not even going to say it.
Let's just say there's an upgrade coming.
A relaunch of this service. Stay tuned. We are going to have this person on regularly, and and they have a lot of fans. Put it that way. So that's what we'll say about that. We love Kimmy. She's the best. But we are going, or we meaning all of us, mutually agreed to go in different directions, and that's okay. It happens. We're still
All right,
friends.
should we do this morning rundown? Market just opened.
At the open?
Dow,
Yeah, we just
Dow,
opened just now.
but the Dow futures opened 15 hours ago.
Excuse me, the futures.
So Dow
Excuse me.
Market's been open for quite some time. Dow
My
futures
screen's
up,
incredibly green.
up almost 200 points. S&P up 23 handles. NASDAQ futures up 60 basis points. Bonds are flat, which is interesting. I really, Brett bringing up those investment grade corporate bonds, really, really interesting. Gold down 70 bips. Here's down $13. Silver down 1%. Copper up 50 basis points. Oil down 8%. And the dollar inching slightly higher with rates inching higher.
Not 8%.
Collapsing.
Not 8%. 0.8. 0.9.
What did I say?
You said 8%. That would be interesting.
Which one did I say was up 8%?
You said oil was down 8%. I don't understand. I thought
down 8%.
Oh, 8%. Oh, I think it said 8%. I thought we're in a commodities bull market. I don't understand.
Yeah, go back and study commodities bull markets throughout history, and one thing you'll notice is that commodities don't go up every day in commodities bull markets.
Oh, okay. Yeah, Bitcoin, I mean, I'll be damned, man. Not just Bitcoin, Ethereum too, holding on to these gains, like really holding on to them. So great. That's awesome. As someone who is
awesome for who?
Everyone that's long crypto and Bitcoin.
You think a lot of people are long? I think more people are not in it. Which I think is one of the bullish catalysts to get this going.
I don't know. I can only speak for myself. I've never sold any of my crypto holdings before. So
you never sold crypto holdings, or you just hold things in bear markets?
Well, it hasn't really necessarily been a bear market for me. I mean, yeah, it was down, but not like abysmally so. I wasn't buying Bitcoin up at like 50 or however high it got, right? I wasn't buying it up there.
So you just got some, you put it away. Just put it away.
Well, yeah, but it's such a small amount. I've been waiting to buy more forever.
Remember, you said you wanted to buy a pullback, and I said no. You want to buy the breakout? Well, that's what yesterday was.
What do you mean yesterday? It happened like overnight. I
Yesterday.
wasn't in front of a. All right, whatever. I was flying. I wasn't. I didn't have internet.
We talked about it on the show.
I know. But then I had things going on.
Listen, I think this is off to the races, and one of the things I've talked about in Bitcoin is that if and when we were to break out above 31, which we just got over the last couple of days, I do think we retest those former all-time highs. But I've been in the camp and remain in the camp that I don't think it stops there. I don't think it stops there at all. I think we go to 100, 120.
Well, you said regardless, the line in the sand is 31, right? So just above 31, that's kind of that's it. Above 31,
that's it for me.
Go below 31, no go. Right? This is essentially And wait, there's a question in the chat about 3M and the Dow. The Dow Jones index doesn't it rebalances 4 times a year, and the next rebalance isn't until the end of the year. Right, it's like at the end. I think they rebalance at the end of each quarter. So, and the quarter just started. So, one hole asking about the drop in 3M impacting their weighting in the Dow. It wouldn't impact the weighting in the Dow until they rebalance it at the end of the year. So,
no, it's not. Has nothing to do with rebalancing. It's a price weighted index. There's no rebalancing. I don't know where you got that. You're just making that up.
No,
3M. There's no rebalancing. It's a price.
Oh, you're right. You're right. I was looking at the equal weight. You're right. I'm sorry. Yeah.
No.
Okay.
This is it's price weighted, so it rebalances.
You're right.
Intraday all day.
You're right. Yep. You're right. Sorry, I was looking at the equal Dow Jones.
So currently, 3M is the 23rd largest component, sitting at 1.7%. So the largest components are United Healthcare, which is 10.5% weighting, Microsoft 6.5%, Goldman Sachs 6%, Home Depot close to 6%, Amgen 5.5%, Mickey D's 5%, Caterpillar 5%. So those are the largest components. So 3M is already down in the gutter. Walgreens, most of us are surprised that Walgreens is even in the Dow. What it's still doing there, nobody knows. Verizon's still in there somehow. Nobody knows why. Intel, nobody knows why. Cisco, these are the worst companies on the planet. So I think that we will have some changes to the components. When we have those changes, Spencer, are they bringing back Exxon?
Yeah, like Exxon for Walgreens, right? Is that the move?
They took out Exxon and brought in Salesforce a few years ago, right before Exxon shares really got going. Will they admit that that was dumb and that it was a mistake and reverse it? Or are they not, are their egos not going to allow them to admit the mistake, and they won't bring Exxon, or even worse, bring on a different energy stock so that they don't have to admit the mistake? You see what I'm saying? They bring in the Schlumberger or something. You know what I'm saying?
Here's a question. I could probably look this up. I don't know if I'm going. Yeah, look it up right now. Maybe you know. Has a company ever been dropped from the Dow and then re-added? No.
Of course, all the time.
Yeah.
General Electric was dropped and added twice, I think.
Really?
Oh yeah. Oh yeah. Honeywell has been dropped and added a bunch of times too.
Oh, but Honeywell, but that was like a merger situation, right?
No.
Didn't they?
No, they were kicked out, and they were just brought back recently.
Okay. All right. Then the more you know, right?
Yeah.
Sure. Exxon for Walgreens.
Yeah, I think General Electric was kicked out twice and brought back in. So yes, there's precedent to answer your question.
All right.
No?
Yeah, Exxon for Walgreens. Exxon for Walgreens. That's the move.
Exxon for Walgreens. Yeah, that's probably
That's what I would do.
Yeah. Well,
all right.
Funny that Strazza and I are building our own Dow Jones Industrial Average, so you have the ability to weigh in at any time you'd like, and we can either accept, we can either take your suggestions or ignore them. And if I had to guess, we'll probably do some of both.
You guys are doing like a revamped Dow that we're going to be unveiling here in a little bit. Maybe, I don't know, we didn't discuss this though. Maybe you only pick 29 and you let the crowd pick the 30th.
No, definitely not. We're definitely keeping 30, but we're going to let the crowd weigh in. We're going to bring in our smart guests to come in and weigh in on why, we're adding Schlumberger, for example, why we shouldn't add Schlumberger and we should add something else. We'll let them weigh in. And fortunately, we have really smart friends, and I am okay with looking at Strazza and being like, that was actually a really good idea. We should probably add it to the Dow and take out, right? Like, I'm going to be very open-minded with this, Spencer. This isn't going to be like this, like our way or the highway situation,
Yeah. All right. I was just looking at the Dow and I realized they haven't changed the Dow components been over 3 years now
since the Salesforce Exxon.
Yeah, that was the last. That was it was August 2020.
Wow.
Yeah, 3 years ago.
It was like just yesterday.
It does. I know.
Because
it was a big deal.
Be like, oh, you think they're gonna regret this?
It was a big deal for Salesforce to get in there.
Yeah, they went straight down after that.
They may have.
And Exxon went straight up. Which is industrial average would be pushing
straight up.
Right up.
Yeah, well,
what
are you gonna do?
I did the math. Little hot corner.
Yeah. All right.
Hot corner.
Yes, we do have hot corner. I don't think we did it yesterday, but let's do it right now. We have a table.
Hot corner. So hot right now.
We got some action. We this biotech stock is just too small to talk about. It's $500 million.
BioLife Solutions.
But it's $10 million.
Medical supplies.
BLFS.
Medical supplies. Oy. You know what? I got to tell you, I spent the weekend at my grandpa's in Florida, and you would think he was a paid spokesman of Medtronic. The amount of Medtronic crap he has in his house, like everything,
Funny.
everything was Medtronic this, Medtronic that. I was like, oh my
It's
gosh.
funny when I
Anyway.
was, when I was having babies, I was spent a lot of time in hospitals, all kinds of checkups and everything like
Yeah.
that. And you start noticing like the
Oh, yeah.
striker, beds and
Yeah,
like
oh,
all
yeah.
sorts of like gadgets. I'm like, I know, I trade all these stocks.
Uh-huh.
Yeah, it's pretty funny.
Anyway, yeah, this is a big purchase. Yeah, BioLife Solutions and what's that? Kasdan Capital.
What about so
Wow.
and fine, like listen, say what you want about this one stock, it's a disaster, all these things. One thing we have noticed from the hot corner is just how many Form 4s and insiders are buying these little biotechs, $1 billion, $2 billion biotechs. This one's $500 million. Like, to me, it's more of the trend of these insiders stepping in here. These things have gotten clobbered. What about $1 million in CCL?
Yeah, speaking of clobbered here, this is a very interesting buy in context of the chart, right?
What, the Carnival?
Yeah.
Randall Weissenberger filing a Form 4, so he's already an insider. Weisenberger. He's not on the he's not in the C-suite. He's a board member.
No, he's just a director, yeah.
Yeah.
Yeah, and yes, this is a repeat purchase. He's been buying. He's been buying for a couple of days now.
Yeah.
I think. Last I saw.
It's $1 million. It's not nothing. I mean, it looks like he's estimated net worth about 100 million, so he's got a few bucks, but $1 million is $1 million. Like, that's that stands out. And who knows how accurate that net worth is anyway, but still $1 million. It's not nothing on it. Personally, he's buying, right? Not a hedge fund. Like, this is his money. What about this 13D? This is interesting. 13D on this utility stock, SWX. This is an activist shareholder who's just disgusted, I bet, with the behavior of utilities, including this one, SWX. SWX is a regulated gas company, $4 billion. So you're looking at small cap utility paying 4.3%. This thing's down near multi-year lows. I mean, this thing just with utilities just got slammed. And then Chewy, options activity on the Chewy, CHWY. That's like an ARK stock, isn't it? Would you consider that?
Yes, it is.
It is? Like, is it technically an ARK stock, or do you just trade with it?
Well, whether it is or it was is besides the point. It certainly was at one point.
Certainly, I mean, literally, this thing peaked in February of 2021 when ARK peaked.
Yeah,
this thing somehow
so I didn't realize
than ARK.
So going back to the Carnival, Randall Weisenberger was the CFO of Omnicom Group, which is OMC publicly. He was the CFO for quite a while. So he's and he's on like a bunch of boards. He's on the board of Carnival, he's on the board of Corsair, he's on the board of Valero. He's doing the board life. So good for him. Anyway, yeah, Chewy was, I don't know if it still is an ARK stock, but it certainly was at one point in time.
It's an ARK stock. It's one of the worst ARK stocks. This thing, whoo, smoked.
Good business. I've yet to hear anyone say a bad thing about Chewy, the company, or Chewy, the business.
The stock's down 90%. So whatever it is they're doing, they're not doing it. They're not doing it well.
Yeah.
So I don't know anything about their business, but it looks like it sucks.
Okay, should we bring on Patrick and talk chart report? We got Pat here. All right, where's my chart report? Thingamajigger.
Yo,
Patty.
Happy Tuesday. How you guys doing?
Happy Tuesday. What's up, man?
Oh, not much. Nice little turnaround Tuesday too. so
Nice
far.
little turnaround Tuesday. Yeah, maybe. I mean, what do you think? Are you buying stocks here? What's going on?
I think, seasonality's been working so well, and I hate to boil it down to that, but what if it is that simple, right?
Look at this. It's a young Jeff Hirsch over here. Come on.
And what I'm particularly thinking about with seasonality is that small cap strength that you tend to get in that seasonal strong period. So, we have yet to see that. Yesterday, it was another 52-week low for the Russell 2000. Yeah, it's leading a little bit today. We'll see how we close, see if we can hold on to these gains. But yeah, I think you got to be optimistic into the end of the year. People got so bullish, so ahead of themselves towards the end of the summer, and then you saw the correction and you saw that fear come right back into the market. And I think that's bullish. So
volatility usually peaks right around now. Stocks usually bottom right around now. Regardless of any of those seasonal tailwinds, which we clearly have, I'm looking at areas of relative strength. Google's numbers. I mean, I'm not really interested so much in the numbers as I am the reaction. A lot of relative strength we've seen in communications. Those things continue to act strong. I think healthcare, you've got your ear to the ground better than most. Is there anybody talking about healthcare, Pat?
no. I mean, what has there been to say, right? I mean, it's been a range bound chart. It's been messy, hasn't really particularly been an area of strength. And then you have pockets of extreme weakness within it, right? Like medical devices, just
biotech.
Right. Biotech just really can't seem to get going. I think we saw another multi-year low last week. But maybe they scoop and score. Maybe it was kind of a false move. Maybe what we saw the last couple of weeks was capitulation. And after you tend to see those moves where they throw it all out, you tend to get some kind of chasing when they rebound.
What stood out?
Pat, I want to bring up.
What stood out last night?
Wait, no, I want to bring up this chart that Pat shared on over the weekend on Sunday.
Yeah. So this one to me is pretty telling. So in the top here, you have the 10-year yield. That's hitting 5%, which aligns perfectly with that first Fibonacci extension there. So yields are at a pretty logical level to see at least a pullback, a little bit of a pause, right? And it, like I said, 5% on the dot there. And then I think it's also really notable that last week, while you had the new high in the 10-year, the dollar did not make a new high. And again, maybe I'm oversimplifying it here, but I think that divergence between those two, I called them the wrecking balls. I'm not the first to call them that. But they've been moving together, particularly since the summer. They've been moving higher together. And when you see one make a new high like that and then the other not, when they're after a pretty long run like that, I think that's pretty telling.
I was looking at the exact same thing yesterday. I started to mention it last week and Strazza was breaking my balls. I was like, the dollar's not making new highs. Why isn't the dollar making new highs? And Strazza was like, but credit spreads. I'm like, I know credit spreads. I'm not ignoring credit spreads. Just saying, if credit spreads were indicating that the world's about to fall apart, why isn't the dollar making new highs? Now, to Strazza's point, it hasn't made new highs yet. And if rates are going to keep ripping, the dollar's probably going to make new highs also, right? You're pointing to an interesting potential divergence that I've been noticing myself. The dollar peaked in October the 3rd. So I think, I hate to say that there are like mixed signals from an intermarket complex, but there are mixed signals from the intermarket complex. I mean, what can I tell you?
Actually, you mentioned Jeff Hirsch. He was the one who kind of first had me thinking in this frame because I asked him, what could potentially derail a year-end rally, and I was asking him, like, are you concerned about the dollar? And he was like, well, I guess, but it's really more about rates, right? Because rates are driving the dollar. So, if you should really be worried about rates here. So that's where I was kind of saying, okay, if we're starting to see mixed messages at pretty logical resistance levels, that's an encouraging sign for the bulls, I think.
What about the chart report yesterday? What stood out?
Man, So obviously Bitcoin. That was
Keller
the
quoting
big one.
PTJ here, right? The
Yep.
PTJ quote about the 200-day. Keller.
Yep, kept it super simple with the chart of the day yesterday, just the 200-day moving average. And a lot of people are fixating on that for obvious reasons. The term of the day, the way people describe yesterday's price action was volatile indecision, which I'll quibble with a bit. I mean, volatility dropped, but it was a very indecisive day. You know, you saw people get kind of excited when the market started coming back, and then you kind of saw some selling into the close. So kind of a pause, but now you're seeing that kind of gap higher. And I will say you saw a nice little RSI divergence yesterday. You know, price made a new low. RSI didn't even get oversold. So there's definitely some encouraging signs there. And then if you scroll all the way down, you got Ryan Dietrich reminding us
You're
that
just skipping over. What about me? I made the top 10 yesterday.
you sure
I'm in
did.
there.
You sure did. I mean, yeah, Bitcoin, what a breakout, right? I mean, I know you guys talked about it a little earlier in the program, but your point here is spot on. I mean, this thing's up 90%, and we talk about the dollar, how well it held up to that. I know you've been talking about how well gold's held up to the dollar, but how about Bitcoin, right? I mean, that's very impressive.
Yeah, one thing about the gold is the real rates, right? With real rates ripping, gold hanging in there really well. That to me is really impressive. Bitcoin hanging in there despite a stronger dollar, despite weak stocks, right? And we're making new 52-week highs before anything else is.
Yeah, and it's one of these things where, everyone forgets about it until it makes a move like it did yesterday. And then all of a sudden you check, you're like, oh, what? It's up 90% year to date? What?
Now, with that being said, there was a lot of rotation into growth and these sort of long duration assets, like literally the first week of the year. Bitcoin got started maybe a little bit before the first week of the year, right? So there's, I hate using year to date returns. I shouldn't say I hate it. I think it's important to not overthink year to date returns, especially in a year like this one where rotation came in literally right around the turn of the year. So let's remember that while it's up 90% this year or 100% or whatever it is, it came down substantially also. It lost 75, 80% or whatever the number is. So just remember that too.
Probably far better to look at things off of like the October low last year.
Right, which still monster run off the October lows last year, no question.
Yeah. And then right under your chart, I think, is a chart from Jeff DeGraff or the people at RenMac, maybe one more down. But just reminding us that, these two were pretty correlated, the NASDAQ and Bitcoin for a while. And at the very least, I think Bitcoin is a good proxy for risk appetite. And if this thing's breaking out to new 52-week highs, how bad are things for stocks? How bad is the environment really? So, that coupled with if you go one more down, that seasonal tailwind that's about to kick in, things I don't think are as bad as you might think if you just logged on to Twitter and saw that the world was ending.
Is the world not ending?
It very well could, but
I was promised a hard landing. How hard of a landing? And who is it that's landing? I'm still not even sure.
We're all in the plane. We're all
like, what is this landing that we're waiting for? I don't really even understand. What are we landing exactly? Does anybody have an answer for me?
I do not have an answer.
The economy is an airplane, and we're trying to land in a storm. And
listen, for most of us that have assets to put the money to work, and jobs and all these things, recessions are a choice for most people. If you're putting money to work in the market, I mean, the majority of our audience,
I don't know about that.
I think it's up to you. I really do.
Recessions are not always a choice. But can I just
not for everybody, but for a lot of us, it is.
Some people. Can we talk about
a lot of
Spotify?
people?
Can we talk about Spotify for a second here? This thing,
Sure.
The stock was down 10% this morning. It is now reversed incredibly hard. We are now up basically 10% this morning. We were down 10% in the pre-market. We are now up 10% on the day. Huge turnaround on there. I didn't look at the numbers or anything. I can if you want, but what what a turnaround here for Spotify.
Wow.
Yeah, and if it's and we showed this chart before, above 53, 54, right now we're 52 and a quarter, 53, 54, I think the squeeze could really get going.
I like that chart.
Does it have? Let me see. Total.
You're saying this thing was down 10% in the pre-market?
Well,
and it gapped up with it?
I'm saying it was down 10% from the pre-market high. So not on the closing basis, but if you take
That
the pre-market high,
y-axis isn't right. That y-axis isn't right.
What, on this chart?
Yeah, that y-axis is wrong. Here.
Okay. Well, my point was, I
think that chart might be in CAD or something. I don't know. But here's the chart. This is the one that pull up look at slide 4 there.
JC, only you would be able to recognize that the scale is off like that.
I mean, it was way off. So I'm not sure if that's the TSX exchange or something else. Take a look.
It's probably CAD. That's more like it.
Yeah, there it is.
Wait a minute.
What?
Hold on. What are we talking about? Are we talking about Spotify or Shopify?
No, Spotify. Wait, Spotify.
I'm wrong.
I was like, that ain't right.
I'm wrong.
All right. Anyway, Shopify looks okay.
Shopify looks great. I thought that's what we were talking about. All right, that's my fault.
No.
My fault.
Yeah, all right.
Listen, see, Yep, my bad.
Hey, you got 3 of the 4 letters. It makes sense.
Yeah. That one doesn't fit
aren't they both Canadian too?
No. Spotify is what are they, Dutch? Spotify might be
Luxembourg.
Or Sweden. They're from one
Luxembourg.
of those. Well, the founder is Daniel Ek, I think is Swedish, I believe.
I'm Cuban, but it doesn't mean that the company I founded.
I think
you're right. Headquartered in Luxembourg. Wow.
Yeah.
Well, the reason I want to say that they're Swedish is because I think they report earnings in like Swiss francs. So
I've never been to Luxembourg. What kind of loot do they use there?
I think it's supposed to be like the wealthiest country, maybe per capita or something like that.
Monaco.
Yeah, probably.
Well, Monaco.
Also, the least murder rate in the world there in Monaco.
Oh, no kidding! I'm stunned.
Very safe.
Speaking of Monaco, I've been watching. My favorite dumb trade to make is always a trade where I can like get ahead of like a social trend or whatever, like I did with Barbie and Mattel. I've been watching this Formula One, thinking about it would run into and after this Las Vegas Grand Prix, which is in like 2 weeks, but it really hasn't done anything. This stock is boring as hell.
What's the ticker?
FWONK. It's Flunk. And it has done nothing. I'm waiting for it to get above 70. Holy moly.
Yeah, what do you mean it's done nothing? This thing's up 4 times off the COVID lows. This thing's one of the best performing stocks in the market.
I think they may have done some ticker conversions or something because my chart only goes back to like...
Oh, hold on. Is this Liberty Media?
It's the same. It's very confusing. Yes, that's the name of the company, but there's more than one ticker. But FWONK, I only have data going back to like this year, so I'm not sure what's going on with that. But it's done nothing.
Yeah,
nothing.
So you're looking at, hold on, time out. You're looking at 70?
Yeah.
That's probably a good level. I like that.
Yeah, I know. I'm waiting for it.
Set your alerts. Set them up. Set up the alerts.
All right. Let's do some quick recess, and then we can get out of here and move on. Where's my recess?
The recess for me is to just as a shout out to everybody out there to make sure that you understand what's inside of the indexes that you're talking about and observing every single day. I want to say like 99% of investors or more don't even know what's in the Dow Jones Industrial Average, what's in the S&P 500, what's in the NASDAQ 100. Investors just don't take the time to go in and see. It is a market of stocks, and understanding what's driving these indexes can be incredibly powerful and a huge advantage. I encourage you to do that. We do a lot of reverse engineering around here, where if it's a bull market, let's just say, for example, there are certain stocks that should get a bid, and we can catch them at the right time just by essentially reverse engineering those driving forces of the indexes. And that's what I'm doing with healthcare, why I'm long United Health and looking to add to my healthcare exposure. I think this is a sector that's been left for dead. I like it.
Okay, my recess is tomorrow's show is going to be a little bit wonky. Pat, I haven't talked to you about this yet, but you want to co-host tomorrow's show with me?
Yeah, let's do it.
I like it.
Excellent. All right. JC and Strazza are both they're around, but they're going to be busy doing some recording some other stuff. So for some
we'll be doing some other business.
So but we're all still around, and I don't want to not do a show. So I'll talk to Sean as well. Maybe we can get Sean to join us tomorrow for the whole thing, and it'll be fun. It'll be a bit of a different vibe tomorrow.
I like it.
So
it'll be quieter, less obnoxious.
Yeah, less arguing. Hopefully we'll have internet all worked out for tomorrow. We appreciate you guys for hanging with us. Thanks to our guests. Thanks to Brett. Thanks to Patrick. Thanks to all of you guys in the chat as always. Hit the like button. We'd appreciate that. Oh, Pat, do you have any recess for us before we go?
Oh man, recess. Just public service announcement. I think people need to eat more ramen. I had some awesome ramen last night, and I was just thinking, I don't think people eat enough of it. So
I agree.
Yeah,
I agree.
Ramen, not
part of the program.
Not part of the program.
Not part of the program. But,
Yeah.
but delicious. And if you have the metabolism of a one Patrick Dunawilla, you can eat all the ramen you want. Don't worry about it.
All right. Thanks a lot, guys. Stay tuned. We got CRL, if I can speak, Chart Request Live at 1:00 today. Stay tuned for that. We, of course, have Twitter Spaces. That's at 11:00. That's at the chart report. And that's the plan. See you guys there. Have a good one.
Adios.
all right. Cheers.
Run it.